They're actually more than just a trucking company. They're really a diversified transportation provider, and they have a lot of different businesses. Trucking is one of their businesses, their truckload business. And they also do, and it's their biggest and most profitable, is their intermodal business. So that is a container that will start on a truck and then goes on a rail and then is final delivered by a truck. And they also, in addition to that, they have a final mile business. So think of getting your exercise equipment or furniture delivered to your home. They have a freight broker business, which is kind of, it brings together capacity providers and shippers. It's a non-asset business. And they also have a dedicated business. So a lot of companies will kind of outsource their fleet to companies like J.B. Hunt. So their hands are in a lot of different parts of the freight markets. And to your point, they are a bellwether because they do touch on so many different modes and industries.
Who's their competitor? Who's their biggest competitor in doing all of this? Or is the market kind of split up based on geographic location?
Sure. Well, there are companies that are similarly set up to J.B. Hunt, like a Schneider. Those are those orange trucks that you see on the road. But like a Werner trucking company has a big dedicated business. C.H. Robinson is a huge brokerage business. Hub Group is another intermodal marketing company who does the intermodal stuff. So they have a lot of different competitors within the market. But some of the largest publicly traded trucking companies besides J.B. Hunt, Werner, and Schneider are Heartland and Knight Swift are some of the large truckload carriers, and there's a whole subsegment of less than truckload, which J.B. Hunt plays very little, and it's only they're playing in their brokerage business.
So, Lee, based on your history covering the trucks, how do you look at them and their business models as kind of reflective of maybe how the U.S. economy is going?
Well, what I would say is, their stock is on fire right now, and that's really driven the fact that they outperformed in the third quarter. A lot of that has to do with them doing company-specific, company-driven cost-cutting measures. So it's not so much about the macro; it's kind of more about, what is J.B. Hunt doing? And they've, increased their productivity or reduced costs by around $20 million, which added 16 cents to the bottom line and helped fuel that beat. What I would say though, to the macro is we are pretty interested in management's comments on the peak season. So, they are expecting a peak season this year, maybe not a very strong one, but, we're going into the peak season and think it's going to be pretty muted. We still kind of think that, but we'll see how it ends up playing. Our thoughts are the consumer is weakening, consumer confidence is going down, and you had a lot of pull forward demand. And what J.B. Hunt would say is some of that freight just got to the ports and now it needs to move inland. So we'll see what transpires, but we're not expecting a very robust peak season this year.
Paul, what were you saying earlier about turnover for J.B. Hunt drivers?
Yeah, the turnover is super, super high in the trucking industry, Lee. Talk to us about the state of that part of the business, just, I guess, attracting and retaining drivers.
Yeah, so it's really interesting. I'm going to pivot a little bit because, they're not so new anymore. With the Trump administration, they're really focused on enforcing rules that are already on the books. And so, there are certain standards that drivers have to understand and read the English language. And they are really going out there and kind of enforcing those rules. We had Werner's CEO, Derek Leathers, on our podcast. I do a podcast, by the way, called Talking Transports.
There you go.
Available wherever you get podcasts.
Very good.
And he said that, that could impact 5 to 15% of supply. And truckload rates have been really depressed over the last 3 years. We've been in a freight recession. A lot of that has to do with the fact that there's so much capacity out there. And this could take some of that capacity out. Also, there's something, the DOT issues non-domicile CDLs. They are stopping doing that. And any non-domicile CDLs that try to get renewed are probably not going to get renewed.
So that's actually the driver's license, right?
Yeah, for non-U.S. citizens.
Got it.
So you're going to see that kind of leave the market as well, and that could be the catalyst to tighten the market. And we don't think it's going to flip on a dime. It's going to be gradual, and that is a good thing because the capacity that's been out there, the slack capacity, has been really stubborn to get out of the market.